Alright, good afternoon everyone. Today is Wednesday, January 16th, 2013. Let's go over the results from this morning's trading. Okay, the results are quick this morning. I only have 10 ticks, plus 10 ticks on gold. Alright, I did trade a couple other markets, but I did not make any money on any other markets. We actually had a webinar this morning where I did a lot of instruction, and not as much trading as I normally do. And I had a little blue screen of death incident that took me out for about 6 or 7 minutes, I think. Thanks again to Brad and Bert and Dwayne and everyone for covering during that 6 or 7 minute span. Brad actually took the charts and the microphone. Brad is one of our new parts.
Dwayne didn't do much.
I wasn't going to leave you out though.
Thanks.
But but thanks guys for covering during that little span of computer weakness there. We recovered from it okay though. We came right back up and got back in there. So let's go over the trades, okay? We started out right, well, we're up 10 ticks on gold. If you've not taken a free trial with us, go to www.cfrn.net/apply. Sign up for the free trial. In the free trial, you get 5 days in our live trading room. You'll be sent an email with instructions on how to download the charting platform and the indicators. And if you want my layout so your charts can look just like mine, send me an email at support@cfrn.net. And I'll send you a layout with a little video on how to import the settings. Okay, so your charts can look just like mine. When you install the stuff from the indicator store, there are 4 CFRN modules of code. You need to download all 4 of them. Okay, one's at the bottom, and there are 3 toward the top of the list that's in the indicator store. All right, so far, for the month of January, in the 11 trading days that we have had, we are now plus $2,035 a contract. That is almost the equivalent of 4 points a day on the EES. Almost. That's excluding commissions. Okay. Now, start with crude oil. That's what I'm going to do. When the thing blew up, it was like 11 o'clock. I had an hour and a half's worth of marks all over my charts and everything. They all went away with it, so you're not going to see all the typical arrows and all that sort of stuff that I have on my charts normally. This morning at 10:30, crude inventories came out, so you can see there was a little bit of activity here between 10:30 and 10:31. It was delayed compared to how the normal crude inventories come out. Normally there's like 50 bars. Today there was about 15. It's weird, but I did say at this time that given the actual draw. Prices should be going up, and prices were right about here when I said that. Okay, and you can see that they did go up, but it wouldn't surprise me to see them go right back down to where they were, 93, 93, 90, right in that range. There were a couple of opportunities in here to get into some trades. We didn't take them. You can see this was the end of the morning session right here. Earlier on, we did get into some crude trades, I believe, and we ended up stopping out at break even. Where the heck was it that we did that? Was it right in here? I think it was right in here. I took a crude trade, and I ended up getting stopped out at break even. That was the trend line. This was the down close. I shorted the down close, and I moved my stop to break even, and it stopped me out at break even. I think I moved my stop to break even when we got down below the MA1. So I had shorted right in here, and I got out right over here, and then it dropped right through. It came back up and gave another opportunity over here, but I missed that one as well. Right there, this was the down close on that one right there. So on the first one, you were shorting right there where the arrow is. On the second one, it was right in there, and it just dropped from there. Okay, that was the trading that I did on the crude oil this morning, I believe. Honestly, I don't remember exactly, but I'm pretty sure that's where it was. I can go check my records and see my trade log. But let's just go over the actual setup for a moment, okay? This is a screenshot from a long time ago. Well, actually a long time ago, a couple of weeks ago now anyway. Step 1 is you look for the MA1, which is this blue and red line, to cross below the BBC, which is the green line. The BBC stands for Bull Bear Cross. You look for that cross, then you look for some space in between. That's step 2. Step 3 is you look for a pullback to test the BBC, and then a close in the direction of the cross. So down, close. Step 4 is check to see if you have divergence down here. I use 8 ticks risk on every single trade that I take. And that's it. On this particular one, it pulled back up here and it tested the BBC and it gave the down close. So we had step 1. There was actually a trade in here that was pre-market that happened. Actually, you know what? I don't think this is the trade that I took this morning. This is the trade that I took this morning. Over here somewhere. Right in here was the trade that I took this morning. Not that one. That was pre-market. Sorry. It's a nice setup, but that wasn't the one that I took. And this right in here was the trade that I took. And this was the down close. I believe. Right in there. Anyway. Step 1 is the cross down below. Right here. Okay. Step 2 is a pullback and test at the BBC. And step 3 is the down close. Now on the down close, if it's red, you can just take the down close. If it's red down here on the cycle, you can just take the down close off the BBC. If it's blue, you got to wait for the close down below the trend line. All right, you got to wait for that close below the trend line. And in this particular case, what you anticipate when you have this is called divergence. When the green line moves away from the cycle, okay, when the green line moves away from the cycle like that, that's called divergence. And you anticipate that the green line is going to work its way back down into the cycle like it does right here. All right, so you get into a trade up here, and you can anticipate at this point that the green line is going to move this far. Now price is going to make the green line move, so price is going to go down and bring the green line with it. The green line is going to lag price a little bit, so price is going to have to go down quite a bit. It gives you an idea of the range on the trade. Okay, I'll go a little further here on the crude oil. It's the same exact trade setup everywhere. In this case, we're just switching directions. All right, here we have a bullish cross. So step 1 is the bullish cross. Step 2 is the pull away. Step 3 is the pull back and test of the BBC with a close in the right direction, the direction of the cross. Okay, right there would be the spot to enter that trade. That was right before the crude inventories came out. That's why I didn't do it. But I did actually point that trade out in the live trading room. I said if you were going to be trading during the crude inventories, right there was the spot to do it. Okay, we had step 4 was right here, the bullish divergence. All right, and you anticipate that the green line is going to work its way up into the cycle, and it did. All right, that's it. That's all there is to it. I did the same thing over and over and over and over again. Well, this morning I didn't do it over and over and over and over. I just did it over and over. I didn't trade all that much this morning because we had I actually recorded this morning's, so I did more instruction in the recording. Gary, I sent that to you yesterday, I think. I thought. Anyway, I do have to send it to Patrick today too. Patrick, I don't know if you're in here right now, but anyway, here we were. This is the Russell. Now you're looking for the same type of thing here on the Russell. Okay, we just didn't have a bunch of opportunity here. It looks like this was the Russell. The spot to short here on the Russell would have been right in here. Okay, there's the trend line. You didn't have any divergence, and you're going right into a weekly trading zone, so you weren't really going to short it there. But if you had divergence, that would have been the spot. Without the divergence, it would have been the down close. As it happened, the thing went up, and right over here, we didn't have any divergence, any bullish divergence in there, so there was no opportunity to go long. So the Russell really didn't have much for us today. I'm just looking at it here. It really did not give us a bunch of anything. All right, so I can't show you anything on the Russell. Even right now, we have no divergence at all to support the down move. Okay, I'll bring gold over because gold is what I actually did trade this morning. So let me blow that up a little bit. And I'll try to find the spot that I traded. It was after the open, so we'll go with that. I believe I traded right over here. This is where I traded. Again, I apologize. My computer literally shut off on me this morning during the live trading room. So I lost all the drawings that I had done on the charts. Michael, you need 2 bars to draw a trend line. Okay, you just need 2, but you may have to adjust it depending on what happens as it approaches the BBC. The important thing to remember here, guys, the things you have to focus on: slingshot, if you have divergence, if you don't have divergence, and how much room there is to run between the green line and the cycle portion of it. And the MA1, you're going to look for shorts, meaning drawing trend lines up toward the BBC if it's below, and drawing trend lines down toward the BBC if it's above. Okay? Yeah, regardless of the time frame. It's all the same. All right. So here we had an opportunity right in here, and this is the one that I actually took this morning. I missed this one. There was one over here. Right here. You would have had to actually could have taken the down close right in there. The down close right there. Okay. But I missed that one, and I did take this one. As it pulled back up, it didn't actually hit the BBC, so I was looking for the down close below the BBC. I shorted it right in here. Right here. I went short, and because we had all this space in between the green line down here on the slingshot and the in the cycle portion, I expected it to get through this area right here. Okay, I ended up taking, I think I took 8 ticks profit on that trade. All right, so it dropped down through the prior swing pivot, and when it got down into here, it was at plus 10 or 11 ticks, I think, at the maximum, and I moved my stop up to plus 8 ticks, and it got me out there. Okay. The next trade that I took, I believe, was right over here. We had the bullish cross. Now I'll show you the picture again. It's the same stuff. It's just a different market. It doesn't really matter what market you're looking at. I mean, you can see right here. Doesn't this right here look almost identical to this right over here? You get your bullish cross. Price is moving up. Price is moving up. Price pulls back. Tests the BBC. Tests the BBC. You have some bullish divergence in here. In this case right here, because of the way that it happened, you had the red on the cycle. You would have had to have waited. Well, you're drawing your trend line like this, down from the top. Okay, until it hits the BBC. When it hits the BBC, you want to take an up close. You take an up close once. If you have red in the cycle, you take an up close. Okay. If you don't have any red in the cycle, if the cycle was all blue, then you could just take the bounce off the BBC. In the live trading room, I go through this much slower. But anyway, I don't think I took that trade, but you could have gotten long right in there for a few ticks. It didn't go anywhere really. Pulled back some, and then it moved up. In here, there was no divergence to speak of, so we weren't looking to get long in there. I don't remember where the next trade was that I took. I'll probably recognize it when we get to it. But this may have been it. I might have even gone long here, but I don't think I did. I think my next one was over here. I'm not sure. I'd have to go back and look at my trade log, but you can see we had the bearish cross, the pull away right in there, the down close. You could actually take the down close right here. The down close right there on that bar. That's a gravestone doji. It's not an up close, so I'll call it a down close. If it were an up close, it'd be blue. Okay, we'll call it a down close because the open and the close were down at the bottom at the same spot, and it dropped right through. We had some divergence down there to support that. Let's see. As we moved up here, there was another opportunity right in here. This might have been. Was this the one? Yeah, this was the one where I took a couple more ticks, because I was plus 8 ticks at this point. And I shorted right here, and once it got down below the MA1, I moved my stop to plus a couple of ticks, I think. I'm pretty sure this is where it was. And it came back and got me out at plus a couple of ticks. Okay. So the entry was there, and I believe my exit was just a couple of ticks lower, right in there. Now, just glancing across the whole thing, right in here is where... I believe right in here is where I had my problem, and my computer shut off. And there was just nothing else that I traded. But not to say that there wasn't any more trades. Here, I'll show you. There was another trade right in here. There wasn't really any divergence to speak of on that one. That was the problem. Nothing in there. I drew a trend line over here. There was a spot right there. That was right at the end of the morning session. The yen, yeah, I'm going to get to the yen here in just a second. I'm working my way across the charts. The NQ, I had identified a couple of spots on the NQ to trade. Could have gone short right in there, long right in there. Same exact stuff, guys. It's just a different market, okay? It's the NQ 4-tick range as opposed to the Russell or the gold or the crude oil. Same stuff over and over. Right in here, you had bearish divergence, and the cycle down here was red, so you could have shorted right here at 27.5. It's dropped down a 1.5 from there. You could have shorted right in here at 29 even, and it's dropped down from there. Gone long up here, gone long here, gone long here, gone short there. There's just a ton of opportunity, guys. A ton of opportunity. Literally, a ton. Soybeans. We took one trade on the soybeans over here. We took a break even on it. We didn't have any support from the slingshot to take the trade, but the soybeans had just been trending up, and usually when they get in a strong trend, they just stay in it. But the thing had been pretty worn out by the time it got to me. By the time I actually got into it, because I had not noticed it. But there were plenty of opportunities to get into this thing on the way up. Right there, and even there. I had 3 ticks profit in that trade before I moved my stop to break even. Then it turned around, and it did the same thing on the way down. Okay. And these are soybeans. So for you grain traders out there, here you go. All right. There's bullish divergence right now. We tested the BBC. We gave an up close. So right here, you would just take the bounce off the BBC right there. Okay. It's too late now. It's already happened, but that's what you would have done. And here on the NQ, just a minute ago, I said you would have shorted right there, right? Okay. And let's see, over here on the ES, I already mentioned that. The YM, this was the spot here at the end of the morning session where we pointed out it going higher, possibly going higher, and then pulling back over here. Simon, I don't know if you're out there, but I did mention that. And now it's actually drawn down some. After the bearish cross, this was the pull away. You had bearish divergence. That's the trend line. The entry would have been on that down close right there. Okay. And now let's do the yen. Okay. On the yen, again, I had to go back and highlight these areas, but the original place that I tried to enter on the yen was right here at 11,328. I tried to enter on this down close right here. I didn't get filled, and once it moved down and put in a lower swing in here, I took my trade off. It did come back up, and it would have filled anyone who tried to, but right here, again, and this is the yen. You get your bearish cross, step 1. You pull away, step 2. It attempted to pull back, which would have been step 3, but it had too much momentum. That's when you have to use the close below the trend line. Now the close below the trend line is a confirmation of the continuation of the trend. The things that are important in here, again, are the BBC, the MA1, and the slingshot. You have to have those indicators to trade like this. All right. So there it was, right there. Okay. And there was another opportunity right in here, and another one right in here. And as a matter of fact, there was one just a moment ago, right over here. There's the trend line. Let's bring my picture over again. Okay. Sorry if my picture is getting boring to you, but it's just to reiterate that we're doing the same thing over and over and over again. And I made this thing, a couple of weeks ago. Step 1 is the bullish cross. Step 2 is the pullback. Step 2 is actually the space in between. Step 3 is the pullback and a close in the direction of the cross. And step 4 is the divergence. All right. 1, 2, 3, 4. Every trade entered has 8 ticks risk. This one right here had an up close right there, and that would have been your spot to enter. So right there at 11,296 or 297 if you want to jump in, give it one more just to make sure you get in. 297. From there, 297 up to 310. That's 13 ticks. It's the equivalent of a little over 3 points on the ES. All right, and that's a nice trade. I mean, the trade over here from 328, it dropped all the way down to 283. What is that? 28, 38, 20, 28, 38. It's like 40 ticks. It's like 10 points. It's equivalent to 10 points or so on the way down there. And that was the morning. All right. We only took that gold trade is what we have to show for it. We did take some more trades. We took more than just that one gold trade. We took a couple that we got break even on. We got break even on the not the NQ, but on the soybean trade, and we also got a break even on the crude oil. I think every trade that we took gave some opportunity to take profit. I am quite certain that that is the case, and that's it. Reminder for 45 ticks. Thanks, Frank. So on the yen, from our original entry down to the low that it had was 45 ticks, the equivalent of $562.50 a contract. On the NQ, we just had to close down below the trend line. I'm just eyeballing it, but not a lot of room to run with the green line. But if you were looking to get short, right in there, there's the down close. Okay, not a lot of room for this to run though, but we did put in a lower swing at the same time. That's a good question, Joe. Joe said, am I actually able to monitor and act on all symbols? It seems mentally complex. I am. I do. Every day. But I don't recommend that everybody do that. I do it because we have, not only do I have all these charts going, but I have 100 people asking me questions. But you should get to this point where you can do it if you want to. But what I would recommend is you just learn the setup. It's one setup. It's one setup. You just learn it, and you can apply it to however many markets as you want. I would recommend one to start with. Then if you want to trade two markets, because one may not be enough activity for you, trade two markets. But I don't recommend you try to trade 8 different markets. Okay? It's one setup. It's the same time frame. It's the same risk, which is also nice. So, you just set all your DOMs to have 8 ticks risk on them. And, when the trades show up, you get in them. If they don't show up, you don't get in them. And, the fact that I have all these different markets going, I can only have 5 DOMs open. I do have sub-accounts. I guess I could open more DOMs in the sub-accounts, but I only have 5 DOMs going at a time. So I really only actively trade up to 5 markets at a time, but I call the trades or I identify the trades on, how many are there? 1, 2, 3, 4, 5, 6, 7, 8. 8 different markets. That's yeah. I'm not sure if that's good or bad, Frank. If you don't slow me down, then you get commentary on every single market. If you do slow me down, then I'll focus on a market for you if you want. Like right over here on the YM right now. You see we have bearish divergence. Right there. It's pulling back up to test the BBC. This is our trend line. Okay. So we haven't tested the BBC yet. So we can take a close below the trend line or a test of the BBC with a down close. All right. Over here on the NQ, you guys heard me say the down close right here. We don't have a lot of room to run, but it is going down. The original trade was right up here on the NQ, right? Brian, I like the first 2 hours, but some markets like the yen trades well at night. If you're looking for markets that trade, that trade pretty well at night. It is the yen, so it trades pretty well when the Asian markets open up. It also trades well in the pre-market. So does crude oil. All right, in the pre-market, like an hour before the 9:30 open. Okay. Crude oil is the same way, though. If we bring over the crude chart, crude and gold, if you look at those in the pre-market here a little bit, let's see. Oops, sorry. I went right by it. Here we are in the pre-market. I did actually show you stuff on crude in the pre-market without actually meaning to. There are opportunities in here. There was one there, one there, one there, one there, and there's another one right over here. And that was all in the pre-market on on that. 5:15 Eastern time. Yeah, I mean you can see the gold is still moving. It's when the European markets open up really that it starts to get some good action. Like right in here, right around 3. Okay, right around 3. You can see right there was a beautiful trade. There's another one. There's another one. So in this move down right here, there was an opportunity there, an opportunity there, and an opportunity over there. Then it turned up. There was no indication to go short in here. It turned up. Let's see, on the way up, you would have been looking at that. Possibly this right here, which may have stopped you out. Okay, right there, which may have stopped you out. This right here, which wouldn't have stopped you out. Right there, which wouldn't have stopped you out. And right here. I'm just eyeballing the trend lines, okay? I'm not actually drawing them, I'm just eyeballing them. But any one of those trades, and that's all before 7 o'clock a.m. Eastern. And then once you get over here, you know, and this is crude oil. Okay, so there's 1, 2, 3, 4, 5, 6, 7, 8, 9, 10 of them. 10 of them before 8 o'clock, we'll say. Okay. So there's a bunch of opportunity. The volume's not bad. It's crude, so you know it doesn't take a lot of volume. You know, if we let me just throw the volume down there on the bottom so you can see it. Okay, the volume's not bad at that time. All right, it's crude oil, and there's enough volume to move it so it looks sort of normal. Isn't, you know, however normal you can call crude, but it's not that bad. Okay. The question was, how's the volume at that time in the Globex? But that's crude oil, and gold is similar. Here, I'll bring the gold over. Gold is similar to the crude in that it starts up nice and early. You see all this movement in here in the pre-market in the gold. And volume on the gold. There's the volume on the gold. Alright. It's not bad altogether. Alright, so you can do the same stuff over and over and over and over and over and over again if you want. If you want to start early. Like for Brad, who was up till midnight. If you went to sleep at midnight, Brad, and you slept till 3, then you could get up and start trading again. Here, I'll just show you the yen too, just so you can see it. And I'll throw the volume on the yen too. All right. And then I'm going to wrap up the recap. Okay. Right in here, 3 o'clock. Some nice opportunity on the yen. You can see it had plenty of volume. Now, if you go back to last night, right in here, when the Asian markets open up, right in here. Look at that activity right there. All right. Plenty of opportunity. All right. So for all you guys that are looking to trade something at night, you know, Eastern time after you get home from work or whatever the case may be, you know, after you close your business for the day, the yen is one of those things that you can trade. All right. Using the same setup over and over and over and over and over again. All right. That's it, guys. I'm going to wrap up the recording here. If anybody has any further questions. Yes, Dwayne?
Nope, I just said okay.
Oh, okay. I was going to say, if anybody has any further questions here. Okay, there's a question right there. Do our indicators work on eSignal? No, they don't. We are exclusive to DT Pro. Okay. There's a couple of ways you can get DT Pro if you want to. Okay. Tony, I'm still working on that recording for the morning. This recording that I'm doing right now, you'll be able to access from the website. This is under the recaps. I'll talk to you about it, Joe. Okay, offline. All right, so I'm going to wrap up the recap here. For partners, it's a reminder, partners meeting tomorrow night, 9 p.m. Eastern Time, as we have done for the last 94 weeks, excluding 2 Thanksgivings. And for anyone who's on the trial, who's not a partner yet, you need to become a partner to get into that partners meeting. Lots of good stuff happens in the partners meeting, and I do it slow. We do record the partners meetings, but it's great to be there. Okay, I do try to do it slow in the partners meetings, don't I? All right, that's it. We're going to wrap it up here. Just a reminder, we are up over $2,000 a contract, $2,035 a contract after our 11th day trading this year.